All right, guys, welcome to this video where I'm going to be discussing the best indicator to trade and invest in market cycles. So now you may be wondering, what is a market cycle? Well, each market goes through its ebbs and flows, and I'm going to show you how to identify what specific market and sector is doing well and which ones aren't, and where you should be investing and trading. So if you haven't already, please hit that like button and subscribe and turn on those alerts to get notified every single time I make a video. Now, I just recently in the past week released a video discussing different types of moving averages and why you should be using them. Now we're going to take it one step further and show you how to judge and know when a market is performing well. So first off, this is the SPY, which is the S&P 500 ETF. So this tracks the overall market. But what we want to be looking at when we're tracking individual market sectors and cycles is to be looking at those individual sectors and cycles. So for instance, XLK is the technology sector of SPY, or the S&P 500. And what you can see here is, as we discuss, this simple moving average line, as you can see here, which we discussed in one of the past videos, is set at 200 because that is known as the industry average for determining the trend. So when a stock is above this 200-day moving average, then the stock is actually an uptrend. When the stock is below this 200-day moving average, then the stock is in a downtrend. And because of that, we can use that to assess different markets. So if you're an investor and you want to assess the market on a long-term time frame, then you're going to be using the daily chart with about a 5-year look back. Now, if you're a swing trader, you want to be looking at the chart on a 15 or 30-minute chart so that you can see the shorter time frame. And if you are a day trader, as you already guessed, you want to be looking at this on a 1-minute chart. So again, please adjust your charts accordingly to what type of investor and trader you are. But for now, I'm just going to show you how the concepts work on the daily chart. So this is XLK, which is the tech sector, and as we can see here, it's above the band. So we know the tech sector is in a bull market. So now we can start to get an opinion of what's happening in the market. But also, an amazing feature is if we actually look back further and to the history of the chart, then we can actually start to assess times in the market when this sector actually does not perform well. So for instance, we can see here that, again, there's a bunch of different variations. So we have to look over the entire year, but we can be like, okay, towards the beginning of the year, it looks like there's a slight sell-off sometimes. But again, you're just looking for patterns and correlations in the market. So again, we can do that with every different type of sector. I'm actually going to list all these sectors below in the description of this video, so make sure you check that out. But another one is XLF, which is the financials. And we can see, based on what we're seeing here, the financials are actually in a downtrend. So they're actually in a bear market. So they're not actually helping the overall market right now. We also have another stock like XLE, which is the energy sector. And so we can look at all these different types of sectors in the market, and we can also look at all the different types of futures, which shows the different types of markets. And we can start to get an idea of when each sector performs well and when each market actually performs its best, and you can invest in those. Remember, when a market as a whole is performing well on a daily time frame and you move into a shorter time frame, then you want to be able to go with the long-term trend. So if the long-term trend is up and you're seeing a move down in like the 15-minute chart, then that may be a great dip buying opportunity, again, if the cycle is bullish. All right, guys, I hope this made sense on how to apply the moving averages to the trading the market cycle approach. All right, guys, thank you so much for watching. If you haven't already, hit that subscribe and like button, and also check out all the free resources I have in the description below.